Good morning, everyone. I thought I'd give a quick update on where I am thinking Bitcoin is heading based on the three scenarios that I posted in my video probably about a week and a half ago now, maybe up to 2 weeks actually. Right, so let's get started. So I had three scenarios, and I think the first one, which wasn't my preference, I didn't think it was likely, which was a push to the 30K level immediately. It's now pretty much off the table for me. I think we've got a bigger correction and more time to spend in this range before we go higher. So let's put the structure back on. I think what you can see here is the big range that we're operating in and have been since sort of June last year. And we have had a nice impulse, which I think is now pretty much done. And I think based on that, we've got a bigger correction, a longer time to spend moving around in this range before we push higher and go for those 30K levels. So let's just go to the daily. Okay, so at the moment, Bitcoin is resting on the 55 EMA. I do think that based on my preferred scenario, which is scenario 2, I think we have one last leg down to break through and tap this mid-range again, maybe just sweep this low before we get a bounce. If we don't get a bounce there, then I think we're likely to go for scenario 3, which is very much a bearish scenario. Will depend on the macro, but let's put on my scenario 2. So what I'm expecting is this is either a start of something, this wave 1, which if it is, we should be getting a sort of two-wave correction. And this here at the moment looks a bit like a WXY. I'm going to move that over there. Yeah, it looks more like a WXY. So it's a sort of a three-wave, and I think it still has one leg to go in this final wave here. I think you've got your sort of 1, 2, 3, and just put in the 4 over the weekend, and I think we need to come down and give us that fifth, which should sweep this low here. Then we'll look for a bounce. This fair value gap that was here has now been filled, but we've now got another one, which is here, which again has partly filled from the weekend, but there's still a whole bunch of sort of liquidity up here, as well as this gap to fill before I think we actually go a little bit lower. Main reason I think we go lower is the time. I don't think that this correction, if it's just from pretty much the end of Feb to only a week or so into March, I don't think that that's long enough to correct this whole move up. I think what we'll find is we'll get a bigger, we'll get a bounce, a nice bounce, a tradable bounce here, and then we'll have a dip lower. I think we'll see something like that in the stock market as well. This will probably coincide with when CPI and other events are released. Due to inflation recently ticking up, I think you'll probably find we get a dip on all markets, and that's when we get this last sort of dip into this region here. It could even dip just slightly lower, just to tap around this wave 1 before then continuing up. I think that's my preferred scenario at the moment. There is obviously the more bearish scenario, which would obviously mean we go a lot lower. And the key for that and the difference between the two scenarios is this red box here. If we break through this and break out of this range that I have on here, let's get rid of this. Then what I think we will do is fall pretty hard and fast, and we'll end up probably around those sort of 12K, 10K regions that everyone's looking for. If it goes really, really, really bad through the rest of the year, there is sort of strong support down at 6, but I doubt we get that far. If we do, perfect buying opportunity, but I don't think we do. So this is the sort of flat, expanded flat scenario. If we do break through here without a bounce, then I think this is more likely. It would mean that there is some real sell pressure, some real bad news, something that's triggered a black swan, and this is how I think the black swan would play out. It would definitely go down to somewhere in the regions of 12K, I think. There'll be bounces on the way, but I think likely to stay risk off for a while if it starts to really cascade down. Other than that, I think that's it really. I will leave it there. If you found this video useful, please like, retweet the tweet if you can. I'm partnered with BingX. They're doing a competition at the moment, and they're also offering lots of bonuses if you sign up and deposit some money. They will give you, I think it's if you deposit 10,000, leave it on the exchange for 10 days when you can use it, trade it. You can get up to 2,000 USD T in return, and that's with like 10x leverage. So it's a good exchange. I've been using it, and it allows US, Canada, other areas which don't necessarily allow you to use leverage exchanges at the moment or are blocked. They have all of the paperwork and everything to allow that. So, and they're a smaller exchange which are currently under the radar of all of the Fed and everyone in the US, the SEC. And hence they're able to offer a good service to the US as well. So give them a go. I'll put the link in the description below. All right, thanks everyone.